Is the greenback due for a bit of a relief rally?
I think you're absolutely right that on an absolute basis, the Fed was a bit more hawkish in its most recent statement. But in terms of the transmission of that hawkishness to the dollar, I think you have to ask a couple questions. You have to ask, was that significantly different from what the market was anticipating? And I do think that the lean coming into the meeting was in favor of this type of more hawkish language. And is the market going to be concerned with what we're hearing from Chairman Yellen when we're looking forward to potential shifts in policy under Chairman Powell? I think that this is part of the reason why we didn't actually see much of a response to the Fed. And I think overall, this probably doesn't change the likelihood that the dollar is going to continue to weaken moving forward. I think you have to bear in mind that yields have been rising for some time now, but the dollar is actually lower.
Well, that's exactly what I wanted to ask you, because we're talking about the 2-year yield at a fresh 2008 high, the 10-year yield at a fresh 2014 high, yet the dollar index had its worst month since March 2016. What is your take on this divergence between yields and the U.S. dollar?
I think the divergence is a surprise to many investors. And certainly in conversations with investors, there's a lot of angst over the rise in yields. There's a lot of concern that this might be signaling a shift in terms of the regime for FX markets. We think that it probably is not quite, that this concern is running a bit ahead of where we actually are in the market. And the reason I say that is that I think when you look at the motivating factor for the rise in yields, it's simply the market moving to price in, better price in the strength that we're seeing in terms of activity, both in the U.S. and as well in global economies. And that really is just the status quo that we've had for the past several quarters. I don't think that it really is going to go far to changing the trend. If anything, yields are just catching up with what we're already seeing discounted in FX markets.
So if you put yields to one side, where do you actually see dollar towards year end, especially if the Fed continues on with this normalization story and we see 3, perhaps 4 interest rate hikes this year from the Fed?
I think that the dollar is going to weaken. I would say that the risk for dollar weakness is concentrated probably a bit sooner than year end. I think that we're looking out on, say, a 3-month horizon. The currencies like euro could be trading towards 130 over that time frame. And I don't think that marginal further hawkishness from the Fed is going to shift that trend. I think that the market well anticipates a degree of strength in the U.S. economy. They anticipate convergence from global economies. And the thing that's going to shift that trend would be a shock to risk appetite. So if risk aversion rose and it forced investors to cut positions and move back into the dollar.